Good day, all. Ira Epstein of Linn & Associates with your metals market wrap-up, and this is for a wild Thursday, August 1st, 2019, and about 4:10 in the afternoon. Well, as you can see, the gold, they say, finished down $5, which it did. Remember that settlements come in at what time? 12:30 p.m. Central Daylight Time. Most of the metals were not at these prices. They were much closer to the highs of the day in the gold market. Silver was up from where it's at right here. In fact, most were. But you go on the chart by the settlement price. Now, what did take place is that the president, after I think it was 1:07 or so p.m., put out a tweet that he's putting up tariffs on the remaining $300 million worth of imports the U.S. does from China, exclusive of the already 25% tariffs that we have on certain goods, to 10%. So it's another 10%, and on different, separate $300 million worth of goods. Caused the stock market to get hit very hard. The metals, especially gold, rallied strongly near the day's high. And the last trades of the day, as you'll see when you reopen tonight, should be a lot higher than that. But the currencies, they were down on the day on the news as the yen was up strongly. So what happened today? It was safe haven buying. People don't really understand, in some manners, what's going on other than the president got fed up with what? The trade negotiations. If you get my reports, I wrote yesterday, if you decide that the word constructive means that the two sides got together, that's fine. But when the whole thing's about a dinner in Shanghai and then a half a day of the sides meeting and then everybody's going home, that's not a trade deal. In fact, to me, that's a sign there was no trade deal, and you certainly aren't seeing that in the ag. But the ag got hit when the president put the 10% tariff on. China's probably going to dig its heels and said, you're not going to push us around. They'll lose face now. So if there is a September meeting between the two sides, it'll be more constructive, probably nothing occurring. My guess is that you're a long ways off from a trade deal. Energy prices got smashed on that because China imports an awful lot of energy. Now, in the nat gas, you were down 3, but it was a little lower than that right at the end of the day. So let's take a look at the charts. When I had first done these, I had the market up here into the 1450s with this line. As it turns out, you settled lower on the day. So for the week, the gold market is up $1.60. That is the way to look at it. When we take a look at this chart, we have an outside day down. You can argue with that all you want. The official settlement price is down $5. It's not the last trades of the day. I have been vocal as can be as to what I think that means. When you look, you have this arrow pointing down, and this arrow I'd put back here. They're definitely in the wrong place, but this is how they would have looked, and I kept that through there. So where are we? You've got a higher high and a lower low. That's all you should care about. And you got a market that's caught between the two Bollinger Bands and hasn't moved out of them at all. Have I not been saying to you this market is just sort of churning right here, and it's caught like in a pipe, and eventually it's going to break out of it. It's like a spring in a pipe winding up, and that's just what happened as we take a look at what's going on in reality in the market. When you look at momentum, it turned up. The bias is down as of this chart, and you had an outside day down. Normally, I tell you, if you take out the high of an outside day down, it's a bear trap, and the market goes to the closest of a key moving average over it, which we don't have one, or an upper Bollinger Band, which would be right at that number, to be honest. So you're in a different level if that number is taken out. I don't know if it will or won't be in the GLD. Why am I looking at GLD so hard? Because we know the futures close at 12:30, and they're not showing you the real situation, in my opinion. I can't argue that the exchange settlement is there. I can't argue what the range of the day is. I can argue, and I always say it, I think it should be a later time during the day that is more in line with how other markets close, not 3.5 hours before the last trade. In GLD, you can see you went up to that number. You have an outside day up. You're still caught in this pattern here of just going backwards and forwards. And in the gold ETF, you got as high as 27.95. You did not take out the last rally high. But what are the markets saying? They're rejecting at this point staying under the 18-day average in both of those, but they haven't broken out of these patterns yet to the upside. The silver market continues in its corrective move where it's losing against gold, and you see that on the chart. Now, the difference in silver and gold is the silver market's been in a downtrend. It's had lower highs, lower lows. It's also had the bias up, so the two negate each other, and you've had an embedded reading. At the end of today, you lost the embedded reading, and you went down all at one time to the 18-day average, and you held. So the market is still in a neutral status. You closed at 1618, which is over the 18-day average. The bias is up. The swing line trend is down, and momentum has lost its upside at this point. In the copper market, you have lower highs, lower lows. Now, seeing the U.S. put on more tariffs on China, I don't see how that's beneficial copper from a fundamental point of view. It could be. I could be wrong, but I'm a chartist. As a chartist, the market today finished out at 266.55 over the upper Bollinger Band and near the day's high. We'll see where it opens tonight. In the platinum market, you had a correction into the 100-day average of closes in the 18, and the market held that. Now, this market was closer to 858, 860 at the last of the day, but it lost its momentum. It's hit a downside target in doing so. The bias of the market on the settlement is down, the momentum is down, and the trend is down. That's how the chart action is at this point. In the platinum market, palladium market, you had a market that had been fighting at the 18-day average. Now, the question was, it had in the past held support at the lower Bollinger Band. You have sideways action. It's a spring. Now, which way does it break out? It not only went through the lower band, it went all the way to the 100-day average of closes and settled under that at the end of the day. Now, I'm not saying that's where the market is. We'll know where it's at when it reopens. Remember, this was before the president's announcement. But this is an industrial metal, as copper's an industrial metal, as platinum is an industrial metal, and as copper is an industrial metal. Gold is not, and people ran to gold because they're scared. And I'm telling you, the last trades were a lot higher than that settlement price on the futures. The GLD and GDX are much more realistic. In the dollar index, you keep, with all the news, even spurting today intraday to 98.70, the Bollinger Band is a problem. Staying over it consistently, no. Embedded reading, riding against it, yeah. You get over, you get under, you go back and forth until you lose that reading. Lose that reading, and it has not done it. That's when the red closes under 80. Well, that could mean that all of a sudden price and the 18-day average want to come back together. So when you look at it, one heck of a violent day. This morning, I looked really good in my morning video. If you were looking at what I had done up until the president came out, the market was holding the stock in the stock indices where I had said, the VIX and so on, and the metals were doing a good job along with the currencies. You had a new issue today when the president decided to put on the tariffs. I'm going to discuss that in detail in the morning. If you don't have access to my morning subscriber video, it's not available to the public. You're not going to find them on YouTube. You have to have a user ID and a password and be a subscriber. You can do so very easy. The first 30 days is $7.95. Come on, it's 26.5 cents a day. You decide if you like it. If you want to roll forward, it's $15 for the next 30 days, or you can convert to a one-year subscription for the equivalent of $13 every 30 days, but you pay 360 days up front, basically a year subscription. How do you find out more? Go to our website, www.iraepstein.com, under Research or Education. Call my staff, or click right here if you're watching me on YouTube. It'll take you right to that page. I'm Ira Epstein. Look forward to the morning subscriber video. You have a good day.